Hey, what's going on, guys? It's your boy MJT, and back with another video. But this is a little bit different. This is about how to read the stock market. Um, so I had, went ahead created this list with this app called Notion. Um, Day trading, chart reading, trading view plus stocks. Just a little bit of the notes I wanted to go over with you guys. So the goal is to teach beginners how to read day trading charts by focusing on what a chart shows, context, time frames, plus key levels, price movement, trend structure, simple repeating setups, and then risk management. So the basics of a chart is price plus time. X being time, so that's going to be your linear or your horizontal. My bad. Your horizontal, and y-axis your price, which is going to be your vertical. The chart is to record of buyers versus sellers over time. So let's take a look at what that is. So if we look at the chart here on TradingView, right now we're looking at SPY, and for example, x-axis like we just seen is going to be your horizontal horizontal page, showing us the time frame of which and when orders were put in. The candles indicate that as well. So you can see the time on the bottom, and for the y-axis we have price on the right. So price on the right hand side, as you can see. And yeah, let's go back over to our notes. Candlesticks. Each candle shows an open, a high, a low, and a close. Still marker on here, no. But I'll show that in a minute right now. How to explain quickly. So a green is a close, then an open. So close to open. Buyers won that period. Basically, what a green candle indicates is that buyers won that position. Sellers couldn't, Red is a close to open. Sellers won that period. Basically saying that sellers won over buyers. Selling pressure was stronger than buying pressure. And wicks show of rejection. So price tried to go there but got pushed back whichever direction. So let's show an example of that. So if we head over to TradingView and take my brush here, let's find a nice individual candle to show this with. Let me see. Let's go to our 15-minute chart. 15 minutes indicating each and every one of these candles are indicating 15 minutes of when price moved. Get rid of this. Get rid of this. Get rid of this. So, for example, this is, I believe, when market had opened. So 9:30 Eastern time. This is when market's open. Market, well, price. You can see price had dropped significantly. Had a major push down as soon as market opened, but usually that's because of volatility. And so what we were talking about, how a bearish candle. This is the red candle. I just have a different color scheme. Um, so price opened here, as you guys can see, and price closed all the way down here. So sellers, well, what happened was price opened here, but sellers pushed this price all the way down here, honestly, to this wick at 738.66. If you look all the way to the right, again, that's our price and time on the bottom. But buyers pushed up against sellers and had sellers close price at exactly 740.50, and I'm looking at that on the right hand side of me. And so that's basically a seller of bearish candle is what they would call it. And if we try to find a bullish candle, for example here, um, so yeah, for example, right here, I did not mean to do that, guys. But anyway, price opens at the low of this candle, prices closes over at this candle, or at this low, or at this high, I'm sorry. And buyers had pushed price to 748, but sellers were showing some pressure and had buyers close at 747. But overall, buyers won this position because you can see price opened here and buyers had took price all the way from 743 all the way to 747. So that's the difference between, you know, a bullish candle and a bearish candle. And yeah, hopefully that explains what that means. Time frames, it's a common mistake. Higher time frames equals context. So what they're basically explaining is higher time frame, you're seeing a bigger picture of what is going on, so you can have a better read and a better entry. Lower time frame is execution, so that's where you want to look towards to basically cut the head off the snake, if you will. That's when you want to execute. That's when you want to kill, because higher time frame is the setup, lower time frame is the attack. Simple day trading stack. One daily, big picture trend, major levels. You'll get to see a bigger picture if you want to do what you do. 1 hour to 15 is an intraday structure, today's story. So within that frame is today's span of what's going on. 5 minutes to 1 minute is your entries. Only after context is clear. So only after these two levels have been looked over and adjusted and understood. So let's go over that real quick. Time frame, and that'll conclude the video. So for example, let's go to 4 hours, right? 4 hours of what SPY had did. So now if we're looking at the x-axis, like we just talked about, like we discussed earlier in the video, you see from 2020, let's go from, yeah, so from February, yep, Wednesday 25th, so the February, uh, price was up here, and well, scratch that, 4 hours, right? Each and one of these candles are basically indicating 4 hours of price move. So 4 hours, 4 hours, 4 hours, 4 hours, and so on and so forth. So from April, we had dipped. You can see from March to April, we had took a nosedive from 688 all the way to 628, which is a pretty massive nosedive. Like if we start from here and come down here, it's a Fibonacci, but we're not going to get into that. I'm sorry guys. Okay. I am messing up. I'm folding. Alright. So 4 hours, right? You want to look at your bigger time frame to see what type of move or what type of market we're in. Right now, in August, July, August, we're kind of consolidating. For example, you see that we have price come here, price come here, reject, price come here, reject. So a couple of times we've been rejecting at this level of 724, 722 in a month. So from June, July, August, we've been constantly hitting 730, 727, 728. We've been hitting this little range of price. So that's telling us, okay, we have a support. What is a support? A support is essentially your floor for price. And floors or supports are usually made by institutional hedge funds. So your big buyers, your institutional buyers. We're just retail traders, people that put little positions in, you know, to get into options and things like that. It's a whole nother story. I'm getting off a topic, but we're here to read charts. Support. Let me do something real quick. I'm trying to find my taskbar. Okay, here we go. So we see from here, we've been hitting this range. And if we see, this is a 4-hour chart, correct? So this is the bigger frame. We see a support and a resistance. Resistance, your floor, or support, your floor. Resistance, your ceiling. Price came to 758, 757 and rejected. Came to this range, 754 again, rejected. 54, 55 rejected. So this is a major support level on a higher time frame. Coming down to the 15-minute, we see the bigger picture or the smaller picture of, okay, price came down and rejected. Same picture, bigger picture, 1 minute time frame. If you come here, you'll see that we marked our bigger picture so we understand, okay, price comes to that range, rejects. we're in kind of like a consolidation, not consolidation, but this is the range. You never really want to trade the range because you never really understand where the moves are at. Again, you want to look at the bigger pictures and the bigger moves. Support, resistance, ceiling, floor. I hope that helps some people. And it's really it, man. I could get more into it, but I just wanted to give you guys a good brief understanding of how to read the market. Just a little quick brief of bit, basics, nothing crazy. And so, yeah, man. Hopefully you guys took something valuable today, and you know, move forward with it. It's your boy MJT187, and I'm about to be signing out in a little minute here. All right.